Gold is having a moment. The buying price of gold futures has hit multiple record highs this year.
Warning that's come from the World Bank of the increased risks of price rises.
Why are the gold prices soaring high? Market prices of an entity is determined by the demand and supply of that entity in the market. If the demand increases and the supply decreases or remain constant, the market price of an entity will increase. During Russia's attack on Ukraine, there were speculations that the supply of gold from Russia to the rest of the world would decrease, potentially causing a decline in the overall supply of gold relative to the demand for it. Speculation surrounding the Israel-Palestine conflict has raised concerns about potential disruptions to the gold supply chain. However, contrary to expectations, conflicts haven't dampened gold supply. In fact, it has flourished amidst geopolitical turmoil. Gold is a rare earth metal, and its production and supply cannot be increased overnight. Russia is the second largest producer of gold in the world. Despite the sanctions imposed on Russia due to the ongoing Russia-Ukraine war, it has continued to export gold to the global market. While the West has ceased importing gold from Russia, India, China, and Switzerland, even through indirect channels, have taken up a significant share of Russia's gold exports. The West's sanctions on gold export-import are being offset by Switzerland and key Asian players like India and China. So the supply side has little to do with the increasing price of gold. It's the demand side that is driving up gold prices. Let's understand how one can invest in gold. Investing in physical gold is associated with the risk of theft and storage cost. One can invest in SGB, digital gold, and ETF. SGB are just like any other bonds and is backed by the government. It provides fixed returns and is redeemable on maturity. It is available in smaller denominations, so it has wider audience. Companies sell digital gold to investors and store the equivalent amount of physical gold in vault. It is a digital form of physical gold and do not offer any interest returns. Investors go to a brokerage firm to buy gold ETF from a stock exchange. ETF shares are issued against physical gold and the custodian bank stores physical gold in vault. It does not offer interest payments. Gold is considered a safe haven asset. Why? Safe haven assets retain their value in times of geopolitical conflicts and economic downturns. Gold is a rare earth metal and is malleable and ductile. Inflation. A political decision. And devaluate fiat currencies. But gold maintains its value without significant depreciation. When inflation increases, the value of paper currency decreases. But gold retains its value. Therefore, gold is used as a hedge against inflation. Gold is an insurance against global shocks. During all these global shocks, one thing is common. Gold. A gold rush amid global shocks is common. India witnessed around 22% increase in gold prices within a span of 5 months. War, central bank gold buying spree, jewelry demand, federal rates and expected recession have fueled gold demand. Amidst geopolitical conflict, countries and people take sides.
We stand with Israel.
Ireland and Norway have announced that they'll formally recognise an independent Palestinian state.
Zara is facing worldwide calls for a boycott after an offensive campaign against Palestine.
Boss of McDonald's has said that the fast food giant is seeing a meaningful hit to its business because customers in the region and elsewhere have been boycotting the chain for its perceived support of Israel, with more
Spreading. This is the University of Southern California, one of many flashpoints across the country.
Police have issued a dispersal order on the USC campus. They warn students that if they remain here, they will be arrested.
Taking sides creates a trust deficit in the overall economy. This trust deficit drives investors towards gold. Countries fear that America, with dollar being the predominant foreign trade currency, may use dollar dominance to influence their trade and foreign policy. Dollar dominance was witnessed when Russia attacked Ukraine, followed by sanctions. Diversifying assets and reducing dollar dominance is now a key agenda for many countries. What's better than gold? Countries can have non-dollar currency payment and settlement system in place for foreign trade. India settled its trade with Iran and Russia in rupees. And to counter dollar dominance and sanctions, Russia pegged ruble to gold. 5,000 rubles equals 1 gram gold. Venezuela paid Iran in gold for oil imports. Why central banks are on a gold buying spree. To counter dollar dominance amidst geopolitical conflicts and economic instability, central banks see gold as the best alternative. Gold is a part of central banks' forex reserves. Since oil, gas, and other trades are conducted in dollars, any geopolitical conflicts and economic crisis can depreciate non-dollar currencies relative to the dollar, potentially increasing import bills. So gold, a safe haven asset, is preferred by central banks. Two major economies, India and China, bought a lot of golds recently. RBI bought 19 tonnes in first quarter of financial year 24, totaling 822 tonnes of gold. India's gold reserves is equal to 8.98% of its forex reserves. The People's Bank of China added 27 tonnes of gold in first quarter of current year 2024, totaling 2262 tonnes of gold. China's gold reserves equals 4.6% of its forex reserves, which is far greater than that of India. China is facing a real estate crisis. Evergrande, one of its major infrastructure firms, amassed $300 billion of debt, defaulting on bonds and other due payments. China's restrictive policy exacerbates the credit shortage in its real estate sector. Real estate, no more a safe haven asset than China. Investors in China are rushing towards gold. Weddings, festivals, or rituals have increased gold's demand in India and China. USA is going through a high inflation phase since 2022. Inflation reached 9.1% in June 2022. The US Federal Reserve hiked rates to 5.3%. Several economists believe the Fed will cut rates in September 2024. If Fed rate decreases, interest rate linked returns on all investment will decrease. Interest returns on savings accounts and bonds decreases. Gold becomes dearer than bonds. When investors will shift from interest rate linked investments to gold because of hiked federal rate. Money becomes dear, and borrowing becomes costly. Returns increase. When federal interest rate falls, demand for U.S. Treasury bonds also falls. When investors will shift from USA Treasury bonds to gold. What is recession? An overall decline in economic activity observed as a slowdown in output and employment. Central banks cut rates to increase money supply. Rate cuts drive investors to gold. United Nations Trade and Development Report expects recession in 2024. Japan and United Kingdom are showing signs of recession, since output and growth have declined. Revenue and profit of companies fall. Fear of companies defaulting on their bonds and other payments rises, driving investors towards safe haven asset. Gold. Since gold supply and its demand both have increased amid geopolitical conflicts and economic instability. However, demand has exceeded supply, causing prices to rise. Thanks for watching. Please like and subscribe for more contents.